Hello, and welcome to Pro Trader Strategies Market Commentary for Monday, August the 1st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We do have a little bit of economic data today, which is a bit of a rarity for a Monday. We had ISM manufacturing PMI, which is Purchasing Managers Index, and ISM is the Institute for Supply Management. So this is actually the one that is looked at the most. And that came in at 52.6, above that 50 threshold that I talk about so much. Anything above 50 is expansion, but that came in lower than what was expected of 53.1. Then we also got construction spending, a bit of a wet blanket on the market here. Came in at negative 0.6%, was expected to be a positive 0.5%, so a little bit lower than what was expected there. And then we got the Institute for Supply Management manufacturing prices, came in lower than expected at 55 versus 61, which is what was expected. So all in all, those economic data points were a little bit lower than what was expected. So the overall markets are fighting back quite nicely for it, but and we have a bit of a mixed bag. I'll get into that in a little bit. Here we have crude oil actually breaking the $40 a barrel mark. They're getting into the 39 handle, so pretty bearish on crude oil right now. Looked like they were trying to staff some of the bleeding there, but today the continuation goes on, down $1, over $1.50 right now as we speak. Anyway, on to gold. Gold /GC up slightly on the day, up a couple of dollars for the most part. I don't know that it's really a flight to quality there, but the overall gold market is pushing higher. Bonds pushing lower, almost down a point. We're down over a point earlier this morning. Bonds down 26 points on the day, with the NASDAQ a little bit higher. This is the chart of the NASDAQ /NQ, up just over 17 points on the day, making a new high here today. The overall market, just with Amazon, Apple, and Netflix pushing higher, has been holding the NASDAQ up on the day. See, this is what I was talking about with the mixed bag. We have NASDAQ up 17. We've got the E-mini S&P down just off their lows for the most part, but they too also printed a new high today. The E-mini S&P's down for just over 4 points on the day. This is the breakdown of the E-mini S&Ps. As you can see, we got the overnight new high, I should say the new high as an overnight print, but heading into the open and after the open with those economic data points, which came out right around here, just through the wet blanket on any attempt to try and print those overnight highs in the day session. So the overall E-mini S&Ps suffering, NASDAQ being held up, like I said, by the Apple rally, Netflix being up, and Amazon. On to a couple of trades that I've done. So I did these trades actually around Steve Primo's PET D. PET D gave a couple of buy indications on a few of his stocks. Was looking for some things to add long deltas, so I been working back and forth with Steve Primo on putting option strategies around some of his technical analysis, and the PET D gave buy signals in several different stocks on Friday and then were confirmed today. So I added a few long positions in there. I did it quite small just to test the waters in there. And with FedEx, which is ticker symbol FDX, like I said, we got a buy signal as soon as it printed above Friday's high, and decided to go into the September. Bought the 165 calls for $2.11. So looking for that to go up and at least test this value area high in the next month or so. Then with GM, we got GM also giving a buy signal as soon as it printed above Friday's high. So I decided to go in there as well. Bought the September 32 calls for 57 cents. You know, there's not a whole lot of options premium out there to be had. A low volatility, super low volatility. It's just complacent across the markets. So I decided to, the time to actually go in there and buy these options premiums. And I'm, again, doing them very small. With Bed Bath & Beyond, ticker symbol BBBY, also print above Friday's high, gave the indication for confirmation of a buy in Bed Bath & Beyond, according to Steve Primo's PET-D technical analysis. It's actually an algorithm, proprietary algorithm that spits these things out. So I thought I'd test the water in there also, and did the September 45 calls and paid $1.59 for those. Now, one thing that I did for Friday's webinar, we were talking about this. As you can see, Verizon just is in a channel and it's just stuck in this range. So what do we do when something's stuck in this range? Well, you can play it by selling some straddles or strangles to capture that. But what do you do when you have this super low implied volatility? Well, you don't want to be selling strangles and straddles in that kind of environment. So we talked about building a butterfly around it. So that is on the expectation that we're going to get a big move and move outside of those wings. So it's like a rubber band getting wound up really tight in this Verizon ticker symbol VS or VZ, sorry, and we're expecting it to kind of pop and move outside those wings. So in that, I took the September, sold the 50 calls, bought 2 of the 55 calls, and then sold a 60 call for that butterfly strategy. And I was able to collect a credit of $3 for that. And the benefit of collecting over 50%, the width of those strikes, is that it is a high probability trade. I'm risking less to make more. So that really worked out well, and that was a suggestion from one of the viewers when we were doing it. I have always go through a lot of stocks and I bet a lot of those. This one was something that missed on my radar. They came up because it is a back and forth in these webinars, and a person threw that out. We went through all the steps of it, and this one worked out the best. So I decided to implement that one today. All right. So that is the call butterfly, the short call butterfly. Friday, we're going to be doing this short put butterfly. So go to protraderstrategies.com, sign up for that. It is a great strategy for expansion and volatility and a larger than expected move. All right, that's all I got for you today. If you can't take that, take it easy.